The next 5 minutes could absolutely change your life. I'm not being facetious when I say that. In case you haven't noticed, things aren't going great around here. Inflation is destroying the purchasing power of everyday Americans. 125 million Americans are living paycheck to paycheck. And I can speak from my own personal experiences when I say the last thing I was thinking about when I was trying to make enough money to merely just put food on my family's table was investing for the future. I get it. I need you to get inspired though, like right now, because that's where it starts. Do you envision a future for you, for your family, that does not involve stressing out about money? Can you envision a life where all of your basic needs are always met? A life where you can take vacations with your family and travel around the world without going into debt? A life where you can retire with dignity and maybe even retire early to focus on what you are really passionate about? All of this comes back to investing. Not this kind of investing. And definitely not this kind of investing. Real investing. But this is where the problem lies. Most people don't invest. The statistics are unsettling to say the least. According to Vanguard's How America Saves 2022 report, and looking at the retirement savings account balances by age, for those under the age of 25, the average balance was $6.3 thousand. For those in the age bracket of 25 to 34, it was $37,000. And for those aged 35 to 44, $97,000. However, what's more revealing is the median numbers. See, the median is more relevant because it measures the true middle of all of the data sets, whereas the average gets skewed significantly by really large or really low numbers in the data. So really, when we think about the average retirement savings account balance by age, these numbers are much more unsettling. People age 65 and over, the median number there is only $87,000. And for the age bracket 35 to 44 at $36,000 and 45 to 54 at $61.5 thousand, these are scary figures. According to this Yahoo News article, an alarming 21% of millennials have invested less than $500 in total over their lifetime. Overall, 54% of 25 to 34-year-olds have invested less than $5,000, and only a small percentage, 14%, have invested more than $50,000. Just 1 in 4 Americans say it's a good time to invest in the stock market, and 65% say they are keeping more money than they should out of the stock market out of fear of investment losses. The real question that you need to ask is, what is possible? Does investing a few dollars every month really make a difference? Well, let's take a look. What if you had invested into the S&P 500 index, or the largest 500 US companies, via an investment known as an exchange-traded fund, for the next 20 years, and you got started for only $50 a month? Just $50 a month. If you had contributed just $50 a month for 20 years, then the total contributions for that time frame would be $12,000, but the total balance in the account would be nearly $42,000. I recognize nobody's retiring on $42,000, so what if you started with just $50 a month, and then every year you increase your monthly contribution by an additional $50 a month, which would mean in year 2, $100 a month, and in year 3, $150 a month. I can tell you what would happen based on the last 20 years of actual historical data. After 20 years, you would have accumulated approximately $325,000, even though you had only contributed $126,000 of your own money over those 20 years. This is a very conservative calculation. More than likely, you would be able to contribute even more once you see how your account continues to grow over time. In fact, if you factor in that most employers have a matching 401k program where they will match dollar for dollar up to usually at least 3% of your 401k contributions, you would actually more likely have nearly $422,000 after 20 years if you contributed at least 3% of your annual salary to your 401k and you made approximately $50,000 a year. And again, this is only over 20 years. Most people invest for 25, 30, 35 years. If you look at the chart, you can see that the efforts you put in every month really don't start to mean anything for a few years. It's not until year 9 when you actually see some separation from your contributions and the additional growth of the portfolio. The hard part is this. When you look at the chart, after 6 years, you only have about $9,000, which many would consider to be disheartening. All great things in life take time and effort, but not much is more critical to your future than to start investing, like right now, today. Let me ask you a question. Do you think you can discover $50 a month in your own budget to try this out for yourself? Real talk here, guys. If you can't find $50 a month, then I would make the case that this future that you've envisioned for yourself, for your family, for the future, just isn't big enough in your mind. It's just not important enough. You need to think big, really big. Take action today to start fundamentally changing your life and the trajectory of your future and your legacy. Because you see, it all starts with investing.